Hey, what's up everyone? Welcome back to the channel. Today we're diving into something that could save you a ton of money and headaches if you own rental properties or plan to in the future. We're talking about S-Corp and whether or not you should be putting your rental properties in one. Now I know what you're thinking, an S-Corp? That sounds official, sounds like a smart move for my rental empire. Well, pump the brakes, my friend, because in today's video, we're going to explain why putting your rental properties in an S-Corp might just be one of the worst ideas for your financial future. So grab your coffee, take a seat, and let's get into it. If you find this video helpful, and I bet you will, make sure you smash that like button, subscribe, and share this video with anyone you know who's thinking about setting up an S-Corp for their rentals. Trust me, this is one you won't want to miss. Alright, before we go off on why putting rentals in an S-Corp is a bad idea, let's make sure we're on the same page about what an S-Corporation even is. An S-Corp is a special type of corporation that allows income, deductions, and tax credits to pass through to the owner's personal tax returns, avoiding double taxation that usually comes with regular corporations, known as C-Corp. Think of it like a filter that lets the good stuff, profits, pass through without getting taxed twice. Sounds good, right? But when it comes to rental properties, this magic doesn't work as well as you'd hope. So, the first major problem with putting your rental properties into an S-Corp is this: self-employment taxes. Here's the thing. S-Corp are great for businesses where you're actively involved in the day-to-day operations, like a consulting business or a software company. But rental properties, not so much. When you put your rental income into an S-Corp, it could end up being treated as self-employment income. What does that mean? It means you might have to pay self-employment taxes, that's 15.3%, on the income generated by your properties. Yikes. Let's break that down. If you're earning $100,000 in rental income, you could be paying $15,300 in self-employment taxes. That's not fun money you're handing over to the IRS, and that's just one of the many reasons why putting your rentals in an S-Corp is a bad move. Here's another kicker that most people don't think about: loss of depreciation deductions. You see, when you own rental properties, you can depreciate the value of the property over time. This allows you to write off a portion of the property's value each year, which can lower your taxable income significantly. But if you place your rental properties in an S-Corp, things get a little sticky. The IRS has a rule that says rental properties held by S-Corp don't qualify for the same kind of depreciation deductions as those held by individuals or LLCs. This could be a huge tax hit for you down the road. Suddenly that tax break you were counting on disappears. And we all know the fewer deductions you have, the more taxes you pay. And no one likes paying more taxes, not unless you're trying to fund the next moon mission. Let's leave that to NASA, okay? Now let's talk about real estate tax loopholes, because yes, there are some. As an individual or an LLC, you can take advantage of all kinds of tax breaks, like the 1031 exchange. This allows you to defer paying capital gains taxes when you sell one property and buy another, as long as the new property is of equal or greater value. But here's the catch. S-Corp cannot use the 1031 exchange in the same way. So by locking your rentals in an S-Corp, you're essentially locking yourself out of some major tax strategies. Not exactly a winning move if you're looking to build wealth and grow your rental portfolio. Next up, double taxation. Yes, you heard that right, double. While an S-Corp itself avoids double taxation on regular business income, things get tricky when you sell a property. Any capital gains from the sale of that property could be taxed twice. Once when the S-Corp sells the property, and then again when the profits are passed through to you, the shareholder, and taxed as personal income. So instead of getting one nice tax bill, you're getting two. And no one wants to pay taxes twice, trust me. Let's be honest, running an S-Corp isn't simple. There's a lot of paperwork involved: tax filings, maintaining corporate formalities, and of course annual meetings. Sure, a lot of you might be saying, I've got my business lawyer handle all that. But for real estate investors, this extra complexity just doesn't make sense. Running a business is one thing, but real estate is a whole different beast. Do you really want to juggle the responsibilities of an S Corp while managing your rental properties? It's like trying to bake a cake and decorate it at the same time. Why complicate things when there are simpler, more tax-efficient ways to own real estate? So, now that we've covered why putting your rentals in an S Corp is more of a headache than a benefit, you're probably wondering, what's the better option? The answer is an LLC. An LLC, limited liability company, is a far more flexible and tax-efficient option for holding rental properties. You get all the liability protection without the complicated tax issues or the risk of self-employment taxes. Plus, an LLC allows you to take advantage of depreciation deductions and tax loopholes like the 1031 exchange. An LLC is the MVP of real estate investing. It's simple, effective, and gets the job done without all the tax nightmares. You can even set it up as a pass-through entity, meaning your rental income is taxed only once, just like an S Corp, but without the extra baggage. So, let's wrap this up. Should you put your rental properties in an S Corp? Definitely not. Sure, it sounds good on paper, but when you dig deeper, you'll see that the tax disadvantages and administrative headaches far outweigh the benefits. Instead, consider using an LLC, keeping things simple and tax efficient. Remember, you're building a rental empire, not a maze of financial confusion. Now that you've learned why an S Corp for your rentals might be a big mistake, make sure you hit that like button if this video saved you from a potential tax nightmare. And as always, subscribe to stay updated on more real estate tips, tax strategies, and investing advice. Also, if you know someone who's considering putting their rental properties in an S Corp, share this video with them. Trust me, you'll be doing them a huge favor. Drop your thoughts in the comments below. What do you think about LLCs for rentals? Let's chat. Thanks for watching, and until next time, keep those rental properties running smoothly and those tax bills low.